And I'm Deonta B.
Welcome to Gwen's Business Corner with Deonta B. Hey, y'all.
Hey, y'all.
So we are at the end of the year. Oh, we're getting ready to go into 2025. And we're going into our favorite season, which is tax season. So today I brought some of my peers so that we can talk to y'all, the taxpayers, so that you can get the real what to really expect when it comes to your tax refund. You know, get some answers if you possibly owe. Help you get prepared for the next tax season by getting some tips on what to do. And so I want the panelists to introduce themselves one by one. And we're going to start with you.
My name is Jasmine Young, affectionately known as Your Family CPA. I've been in the industry. Next month will actually be 10 years. Running my own CPA firm, providing tax planning, tax preparation, tax resolution, bookkeeping, payroll, the whole nine. Running a full service CPA firm.
All right, thank you. My name is Ashley Russell. I am the owner of A&R Consulting, and I always promote that I am out of the big city of Covington, Georgia. I just celebrated 10 years officially being in business. I will be going into my 16th season of preparing taxes. I am a tax professional. I participate in the AFSP. That may be above some of y'all pay grade, but I do participate in that program. It just kind of sets me apart from some of your regular, ordinary tax professionals, but I do pride myself on that. I sell tax software. We provide tax preparation services, notary. We assist with financial aid applications. We do all kinds of stuff. So visit our website, and anything tax related, you can come see us.
Y'all left me the last one. Hey, I'm Cedric, affectionately known as Tax Guru, the People's Accountant. I'm out of Phoenix City, Alabama. We do everything. We save you money. Let's just boil it down. We're your tax superhero. We're a tax and accounting CPA firm. We specialize in the little people, as you may say, up to the 7 or 8 figure earner. So we help save you money. So come see us.
All right,
Welcome
now
all of you to the corner.
welcome to the corner.
This is nice.
All right, so we're just going to jump right into it. We want to make sure that we get everybody ready for 2025.
Yes.
Going into tax season, 2024 tax year. So we want you to tell some of the taxpayers, like, what records or documents should they be keeping throughout the year to make filing simple? Because we know that stuff gets really messy when they get ready to come in to see us for tax season.
Receipts. Bring your receipts. Bring your receipts. We need receipts. Financial statements if you're a business owner, W-2s, 1099s, 1098s. Anything that you get in the mail that says it is form something, bring it. We need it.
Let me piggyback off what she said. Great information. I've just been trying to put it out there that taxpayers who may be, still trying to figure it out, may have multiple jobs throughout the year, make sure that your information is up to date on the IRS website with your former employers, because everybody is in a rush. Well, not everybody, I'm sorry. A lot of people are in a rush to file in the beginning of January, and they have to wait on these forms that are missing from every job that you have worked. You should have a W-2 form from that company. So just make sure that all of your information is up to date so that those employers can find you, and that you won't have to be calling up looking for replacements or trying to pull wage and income transcripts. Just to make it a smooth process, make sure you keep a mental note if you've had that many jobs, and just make sure that all of your information is up to date so that you can receive all the income documents and report all the income.
Well, I can't piggyback off of that because they were just great answers, but I will say give solutions, right? Because most people, we know, suck at keeping paperwork. They suck at keeping receipts. So what I have clients do, go ahead, we know what you're not going to be sucking at, that phone. So go ahead and create something, maybe a Google Drive, or if you got the money, get a Dropbox or something like that. Any documents that you may have throughout the year, take a picture, immediately go ahead and put it in your file. If you got a business, hopefully you're already using something like QuickBooks or Wave Accounting or FreshBooks or whatever the case may be. They all do it. They have a function where you can snap a picture and it immediately go into your files. So now at the end of the year, you got everything in your place that you can pull up on your phone, because I know you're going to have that phone, and all your information is right there, so you don't have to worry about, the tax preparer, your tax professional pulling out their head when it's time to sit down and they're asking you for certain documents. You already got them. One click, you can download them, and it's all done.
So I'm going to add to that. Yeah, we can't be pulling out stuff out of our head, yeah. Right? We can't be pulling out stuff out of our head. Like, y'all have to start to get really, really organized around here. The IRS is going crazy with all this, especially for self-employed people. So you got to get your information together. But that ain't what I wanted to add. What I want to add is that, especially now with so many people being online, getting paid from Facebook and TikTok and all these platforms, Amazon, for being content creators, and the new threshold when it comes to 1099K, which is a question that we'll talk about in a moment. If you're taking payments from third-party merchants, and I want to say 600, because they say they're going to do a transitional year of 5,000, but some people still going to get it for 600 and more. Make sure you wait for those documents. Know that you are supposed to have some type of document if you're making money on those platforms. So wait on it. All right. So let's talk about who's supposed to file a tax return. A lot of people be confused, especially our younger people, in reference to filing taxes. What are the qualifications to say, okay, you need to file a tax return?
So I'll say that there are income thresholds, and regardless of if you meet that income threshold, sometimes it's still beneficial for you to file taxes even if you don't meet that threshold, because you may qualify for certain credits that will still be able to get you a refund. Also, if you've had tax withholdings, federal withholdings, it will be beneficial for you to file a tax return. Those thresholds can be found on the IRS website. I used to know them off the top of my head, but
they don't change so much.
Yeah,
Pick it back first.
they've changed them.
No, go ahead.
You sure?
I am positive.
You're so polite.
I'm trying to be polite because I love her answer, because the criteria, and if you don't know, that's the question. Ask, right? If you think any point in time you don't know if you should file, ask. Talk to a professional, such as one of us. Go ahead and get the information. Because most of the time I go ahead and say the number that you really need to know, 99% of people need to file taxes. Right? It's either you're going to be aged out of filing taxes, or is that you've been hit the threshold of making enough to hit the standard deduction that you may not have to file. But everybody that's in between there, you got to literally file. But like I say, ask a tax professional if you fit within those requirements. And once again, I would also add on to that, make sure the person that you're getting that advice from, they know everything that you got going on. Because like she said, it may have certain qualifications, certain credits that you can actually apply for. And if you're not actually going in leading with that information, you can miss out. Yes. So definitely refer to the person. But 99% of us got to file taxes, because we know what the only thing guaranteed is death and taxes.
That's true. That's true. So I'll just add to what both said and Ashley said. If you get a form from the IRS, okay, if you get a form, the IRS already knows that you made that money. Yes. So not filing doesn't help you. They already know what you made. They already know what taxes you should be paying, what you've already paid. So if you just decide not to file just because, I'm scared, well, get ready to be more afraid, because they coming.
Yes.
The people want their money.
Like Deon said, we coming.
Right.
We coming.
And real quick, just piggyback. If you don't know, and a lot of people still don't know this to this day, the IRS, the Internal Revenue Service, is a collection agency. Mm-hmm. That's what they are. They are a collection agency.
That's a good
They
point.
just like the lawyers that call you saying, we're Greenberg and such, and we're representing such and such. They want their money. That's why your checks, when they send you a refund, who it come from? Department of the
Department of the
Treasury,
Treasury.
because they
Yeah.
do give out the money.
Yeah.
Internal Revenue Services,
They
they
just
notice
collect.
that you getting, it's a notice saying they want something. They ain't gonna never, and it's rare that they give you something back. Cause it take years. So, but a lot of people really don't understand that,
Right.
and they don't understand like what you just said.
Right.
When they get that information to the IRS, they got it already. They already know it. Because what happens when you don't file? They file it for you.
Yes.
Right.
And they don't give you any benefit of the doubt. They don't give you any deductions or nothing. They calculate what they have on hand and they give you a bill.
Okay.
So file.
I love it. I love it.
And if you self-employed, they coming for you too.
Please.
First. They're coming for you first.
Right.
I swear business owners, small business owners are at the bottom of the totem pole. You know, it's like they expect people not to have their documents in order. So they're challenging, you know, a lot of
Whole
stuff.
Schedule Cs,
And we'll
right.
probably get into that with credits and stuff. But yeah, they are challenging
They
a
don't
lot.
Want, they don't want to give people their money. We talk about it all the time in reference to like be aware when people have documents and receipts and you get a notice from the IRS to approve those expenses on your Schedule C. A lot of times the IRS is gonna keep denying you. They're gonna keep denying you. And one, because you ain't sitting there in the orderly form. That's number one. But then two is they're not trying to not make you owe. So what I always recommend, go to tax court. That way you're not gonna actually go to tax court. Most of the time you're gonna be with a mediator, and then you're able to talk to someone and show them where these expenses is, where these receipts goes, versus just keep sending them to these folks and then they gonna keep denying it. Right. Unless you in order, because you know some people have their stuff in order. Ain't that many, but a couple folks.
Real quick, I'm sorry. Because the thing of it is, just a little challenge, just a little rebuttal.
Okay.
Because if you didn't know, all this started way back in the days when they say, we were talking about George Washington went over the water, whatever the case may be. All those puffy hair, fake wig wearing people, they was all business owners. They were all business owners.
Okay.
And so
It was the
when
wig part of me.
taxes were created, we know taxes got created to give back to the city, to community, all that good stuff. But the tax codes and stuff started to grow and grow and grow because the business owners wanted ways to what? Reduce how they were paying tax.
Right.
So, in all actuality, the government wants you to be a business owner. They really want you to be a business owner because that's why it's this much code for individuals and this much code for businesses. So they want you to be a business. They want, because we also in a capitalistic country.
Right.
But you also, going back what you ladies just said, you got to have it in order.
Yeah.
If it's not in order, they're going to come after you. They want you to be that. But if it's not in order, and it's so easy to spot the ones that are not in order because it's so loud, they coming. And they're going to send that notice. And then they're going to put that intent to levy. And then they're going to send it. Then you're going to get thugging all those calls from Optimum Tax Relief.
Oh, Lord. Sad trying to scare y'all.
No, but it's the truth. It's the truth. That's the reality where we live in. Because if you don't notice, Optimum Tax, it's whatever. If you don't notice, why, it is just facts. Every Secretary of State office around it got the little offices that they get the same information. So, for example, why do you think when you form a business, you also get that letter from the scam company trying to charge you $99
And I tell my people
for a
up
$5
front,
post?
look.
Because it's all connected.
Right.
And so they want you to be a business. They just want you to do it in an orderly fashion.
Yeah, they ain't playing with these business owners around here.
Right. So let's talk about earned income tax credit. What would you guys say are some of the most common misconceptions when it comes to this credit?
Go ahead, Ashley, because this whole thing.
We've had a whole conversation out there. So listen, what's the question again? The misconception? The misconception is that it is your money. With earned income credit, of course, it is this is a credit that is given for families, and there are requirements. And this credit can be lucrative to a refund, so a lot of people are, I'm ready for my money, my money, my money. This is a credit that you have to qualify for, and it is a widely abused credit. So what happens is people who don't really qualify for the credit, they start bending rules and finding a way to become eligible for this credit to gain a bigger refund. Now, there are a lot of people that really do qualify for it, but then again, there's how much of the credit they qualify for. So when people say it's my money, my money, my money, and we're talking about the IRS is challenging us on a lot of different things, it's because, you know, this is a credit given by them. It's not always your money. It is for my client base. You know, it can be the bulk of the return. And so they are challenging people to make sure that they qualify for this money. They're not just giving it anymore because, like I think it was Gwen or said, we're loud. We're loud about stuff. And so they know that it's fraud, you know, that goes on. They know that people have to make within this certain amount. You know, people make themselves fit that criteria for the credit. And it's just widely abused, you know, and so they are starting to challenge, hey, let's see before we give you this money, because in past times they give it to you and you may get audited later on. Now they're starting to do more investigation up front before they even give it to you. So when you get your refund, what happens is they'll hold it up and you're going to get everything except that earned income credit part. So you might get a deposit for $200, everything that you would have gotten in a tax refund without that earned income tax credit. So if your refund is $7,000 or $8,000 and you get two, you know, whose money was that? You got back what was due to you. So be careful. It's not your money. Be careful. And, you know, they're really cracking down on it. So just a lot of things that used to go on before social media and stuff like that, it doesn't fly with the IRS anymore.
What you gotta say?
I'm going to add to what she said. We so loud. Like, you stop putting, number one, don't be putting your refund and your tax return on social media. That's the biggest thing. Like, nobody needs to know how much of a refund you got. Two, and I don't know if y'all know this or not, but bragging about how big of a refund you got is really not. It's not a flex.
What is it telling us?
It's telling us that you are below a certain income and you're poor.
You're poor.
You're poor.
You're poor.
The earned income credit is for people who are struggling.
Poor.
So to broadcast that you got a $8,000 or $9,000 refund is saying, I'm poor, probably on Section 8. Poor. Like, you don't want to do that. And I'm so serious.
Poor.
And I feel like we have to, I hate that we have to say it that way, but it's the truth.
Say it again. Say it out loud.
It's the truth. If you're getting the earned income credit, you're not making enough money to be able to not get it. So it means that you need some assistance. And the government is giving you some assistance. So to Ashley's point, no, it's not your money. It's a handout.
Say it one more time.
It's a handout. It's not your money.
Like that.
It's just, that's just the facts.
I don't got nothing. Yes, I do.
And that's not it. And let me say this. And I'm not knocking anybody who gets it. What I'm saying is we have to be more mindful of, one, we need to be more mindful of our mindset as it relates to money.
Yes.
And we need to understand where the money is coming from so that we know what we should be doing with our money. Because ultimately, your goal should be not to qualify for the earned income credit.
Yes.
That's your goal. You can't say you want to be a millionaire, you want to do this, you want to have generational wealth, but you be down our door about a refund. The mindset, it doesn't align.
I think I know why.
So we just have to really check our mindsets as it relates to that. Again, if you get the earned income credit, God bless you. I wish I did. I don't get nothing. But be mindful.
Be mindful.
People know what it means.
And poor.
And that's my client base. So if y'all do get the earned income tax credit, I'm here to assist.
Go
if you qualify for the earned income tax credit, I'm here to assist, and I'm gonna make sure that your tax return is lined up and everything, that you get your money. We're gonna do it the right way.
Listen, we're not trying to discredit anybody.
Right.
We're not trying to dishearten anybody. Wherever your situation is, that's where your situation is. Now, it starts with, do we know what a refund is? So I like to use
Give them the definition.
I like to use this definition. If I go and buy a television from Walmart and I get home and it doesn't fit on my, whatever the case may be, they go and take my receipt back, and some Walmart will give it back, and it don't even be the same TV. But that's another story. But you get a refund. They'll literally give you your money back. They'll give it back to you. Now, That's what the IRS does, or the Department of Treasury. What you put in is what you get back out. Now, a lot of y'all gonna be like, oh, I got kids and everything. Yes, they do. Now, they give you certain credits like children, right? Now, it ain't enough credit, because good Lord, if you got kids, you know that ain't enough money. They also give you credits like if you go to school and certain things like that. But for the most part, your earned income credit is based off of what you actually put into the program. So if you put 0 in the program, you're not expected to get nothing back. And like my friends just said, getting a refund is tacky, because excellent tax planning, excellent financial planning is that you don't want to owe anything. Right. I don't owe you. You don't owe me. We are great. We can move on. Oh my God, I ain't getting no documentation from you. I don't gotta call nobody. That is great. That's what you should strive for.
You want to break even.
Because you want to break even. That's right there. Because if your withholdings are the correct way, if you got a 9 to 5, or even if you have a business, you don't structure your estimated taxes and all of that good stuff, the ultimate goal is I want to break even.
Right.
I literally want to break even. It's tacky.
Okay. So let me tell y'all what the misconceptions of the earned income tax credit is. So some of the misconceptions of the earned income tax credit is the fact that, one, it is based off your income. So the IRS puts out a certain number of income that you make to determine who's qualified for it. And then there's a maximum number that if you exceed that number, then you will not qualify for it. Right. Now, in order to qualify for it, it's based off how many dependents you have, how much income you have, and your filing status. Just because you have 3 kids do not guarantee that you're going to get a refund back or the earned income tax credit, because ultimately it's about how much money you make depends on how much of the earned income tax credit. So let me give you an example. In order for you to get the maximum amount of the earned income tax credit, you have to be in a sweet spot. It's called a sweet spot, meaning it's lower income people who qualifies for the sweet spot. Usually, people who make between the wages of $9,000 to about $17,000. If you have 1, 2, or 3 kids, you're in the sweet spot to get those maximum numbers of earned income tax credit. When you get lower under $9,000, when you start getting past $17,000, based off how many dependents you have, then the amount that you're going to qualify for that credit goes down. So just because you make a low amount of money don't necessarily mean that you're going to get a lot of money for your dependents.
And they're going to have no babies either.
Right.
Don't do that.
So for instance, say you made $3,000 for a year and you got 3 dependents. In your mind, when you come into the tax company, you're going to assume that you should get $7,000 back because you got 3 dependents. That's the misconception. You're probably not going to get but a couple of hundred, probably about $1,000, $1,500, $1,200, because you only earn $3,000. So for me, the biggest misconception when it comes to earned income tax credit is the fact that just because you have kids, you think that you qualify for that credit. And like they said on the panel, the other people said on the panel, is that it's based off your income. And ultimately, let me give y'all a disclaimer. These are our bookkeepers and CPAs who deal with a lot of small business owners. And so their biggest thing is tax planning, to make sure that you don't have to owe the IRS and that you ultimately know what you're supposed to get.
And to add to what Gwen was saying too, when you're getting a refund, that's money that if you had done tax planning, you could have made it to where you got that money during the year versus waiting until April of every year to get a refund.
Now,
and they give you like pennies on interest too. So
they go to think what they're gonna say. See, that's what they're gonna say. They're gonna say, "Well, I like to use the IRS. I like to use the Department of Treasury as a bank. I like to just get my money." Really? So you want to lose, like you just say, I'm gonna lose my money in an institution, leave my money literally there. That ain't giving me no interest. And they ain't giving you no interest.
Yeah.
You might wait for it in the bank. They get at least to get 0.1%.
I'm scared to ask my next question.
But it's the truth.
It's
This is
the truth.
thing that people need to know.
But it is the truth. Now they telling the truth. Though.
Now, little Juju,
But they're telling the truth, but they ain't have to say it like that.
wait, okay, real quick. What I'm saying is, the truth is, if we wanna, listen, the world is changing. It is. The world is scary. Did you see they got a whole robot that can walk your dogs now and clean your house?
Not my
the
dog.
world is scary. And what I'm saying is, and I get it, people, like she said, it's the mentality. And wherever you are is where you are in life. I pray that whatever you are, God got a place for you and a plan for you to go further. And I'm sure he does.
Let's go on to the next question.
Sorry, I can talk.
Let's go to the next question.
She's scared to ask.
Okay.
She's scared.
Oh, Lord.
All right, get back.
All right. So
Tell me
let's
back,
talk
back.
about, we're talking about earned income tax credit, which is a very popular credit. But I had to talk about this subject because it's important. I'm scared to hear their answer. Okay.
I'm going to be good.
So head of household. Okay. A lot of people assume they qualify for head of household. One of the big things that's going on in tax groups that we're debating about is stop allowing your client to tell you what their filing status is. We have 5 filing statuses, and then we know that a lot of married people come into the office acting like they're not married and want to get head of household. We know that a lot of people who don't meet the qualifications and the test for head of household, you know, we can't get them head of household no more because we get fined $635. So we can't even do it. We got to go about what you qualify for. So can one of y'all tell the people, you know, who qualifies for head of household, and talk about the other filing status, like when you file married, filing joint, when you file married, filing separate.
So I'll take that one. I'm going to be good.
Okay.
So filing statuses. You got single, head of household, married filing jointly, married filing separately, and qualified widow. Okay? Head of household. I got it.
Nice.
I burn a hole in my face.
Because I'm looking at the flow like,
I'm just going to tell the truth. Head of household.
I want you to tell the truth. I want you to tell the truth.
The truth is, head of household is for those individuals who are not married that have dependents. Okay?
Yes.
Now, let me say this. If you, and I've seen this situation too, if you were married and your spouse is estranged and you have not lived in the same house for the last 6 months and you have children, you can file head of household. Same thing if you were married and you don't have children, the spouse is estranged, you guys didn't live in the same household for the last 6 months, you can file single. Okay? There's nothing wrong with filing head of household. There's nothing bad to say about that. But it is for those individuals who are not married, who have children or have dependents, because you can have other dependents besides children. You can have your parents. You got a man living with you that you supporting. Dependent.
But you got to make sure.
It's true.
A, you can prove it.
It's true. It's true.
It's true.
It is true. I can claim a man.
That's right.
If I have a man living in my house that
He deadbeat. He don't do that.
I ain't gonna say it that way, but what I'm saying is, if I have someone living in my home that I am supporting, like you got a family member,
Right.
brother, sister,
Right.
Stepson, whatever the case may be, and they're fully grown, and you're providing over 50% of their support, they are a dependent.
I got to quit. You driving
Period.
your car like on Baby Boy?
Oh, you
like
ain't
doing
driving
that?
my car.
Okay. I'm just making sure, guys. You staying at the house.
Nah, ain't nobody staying with me. I'm just saying. I'm just saying, because people need to know. Like, you can, if you want to get your taxes done by a professional, you need somebody that knows these things.
That knows.
And they're not asking you to make you feel bad or anything, but there are loopholes to the tax code. And if you have somebody living with you that you are supporting, claim them. Get that Social Security number.
Just make sure you
get your money.
But don't be
It's
on
legal.
don't be on the opposite side. You can't. Let's say you have kids, right? Now, if you're in this place and you don't pay no rent, you don't pay nothing, you're there, and mama taking care of you, can't claim it.
Right.
Cause you're not supporting them. Cause like she said, it's qualifying rules and it's tests. So listen, and you're absolutely right when Gwen started it. As tax professionals, we have to be the one to take the information
Right.
and say this is where you're at. And we have to be okay with them, whatever they may say, with what we gave them. Because I think that's where the issue kind of is. Because we know the statuses. We know where people fit in.
Right.
And if somebody, cool, man, you coming in here and you got the proof, you got your 2 kids and they running all over the office, which we adore. That's why we have snacks. That's why I have snacks at our firm for the children. But you just can't take that and just use that as your proof. You have to do the test. You have to do the qualifying test. You have to do the relationship test to make sure they fact. Because like she say, I don't know about you. I don't got $639 every time they trying to run it up. I don't have it, and I'm not trying to pay it. So just check. Just do your due diligence. Just ask. And if they don't fit into that area, it's okay. You can still get, if you're trying to get a refund, I don't see people that file single, they get a refund too. That may not be as big, but they don't owe. So please just don't go and just do it and file the statuses. But I know your people.
These my people.
They all people. They my people too.
I mean, I have people that file head of household. So let's talk about the head of household status. Okay. So for head of household, you gotta know that you have to meet the test.
Right.
People, you have to meet the test. And one of the parts of the test is that you have to provide over 50% of
That's what I would wait
your
for.
qualified dependent support. Meaning you can't, if you get, say for instance, you get HAP, and HAP pays, your rent is $900 and HAP pays $800. And say you also get food stamps, right? And the food stamps, the amount you get in food stamps takes care of majority of the food that you have to pay for the month. And say the only thing you pay is say a $200 utility bill, and you might put $100 on your rent. Now you don't qualify for head of household because you have not met the test. Also, you got to know that the people have to live in your home.
And you got to have proof.
Your parents.
Except your parents.
And you got to have proof.
And they have to live with you over 6 months. Not 6 months, but they have to live with you over 6 months. So everybody do not qualify for a head of household just because you have a dependent. Some of you have to file single because you have not met the test in order to file head of household. But that does not necessarily mean that you do not qualify for the other credits that you might qualify for, which is earned income tax credit and child tax credit and some other things that you possibly qualify for, but you might not qualify for head of household.
Let me say this. I think it's just a harsh reality to know or to learn that even when you think you are the head of the household or you want to be head of household because you think it will give you, because everybody, I'm filing head of household. But what I want you guys to know is that it doesn't always even change the refund.
Right.
If you have not met the standard deduction, if you have not made a certain amount of money, then, head of household won't even help you. And I actually show that to my clients sometimes. Hey, watch, this is your number when you're single. This is your number when you're head of household. So especially if they don't have the documentation in order, then, you're going to be marked as single and it's less risky. Head of household can be a red flag.
Right.
And can get you out of there.
Absolutely.
Absolutely. So let's talk about self-employed individuals. What are some tips?
Yes.
What are some tips that you guys can give to some of our small business owners to reduce their tax liability?
Oh, God.
Be truthful.
Since we've been going first, go ahead.
I'll say make sure that your ducks are in a row. Make sure that your business, is structured. Make sure that it is a real business. Make sure that you are not over reporting expenses. What I see a lot, I see it on both sides. I see people who have not made enough and want to pad the income, to boost it up. And but what's the bigger risk? It's the people who have made too much and are trying to offset or reduce their their income to reduce their tax liability. So that's where the inflated expenses start to come in, and people just want to start writing down things or writing off a lot of stuff, which is not helpful all times, and it puts you at a bigger risk. We've already said that if you have a Schedule C, you're about 50% higher chance of being audited. And if you are trying to make a purchase a home, anything like that, you don't want to write off a whole lot of expenses. I know that, that's a different area, but I just wanted to talk about that with expenses. But basically, the IRS is coming for small business owners if you have a Schedule C. So just make sure that you have not commingled funds. Meaning you're not using your personal bank account for business, and vice versa, and that you have record of your income. I know it's hard for small business owners. It took me, and I'm still training my husband, Lord have mercy. But you want to make sure that you're using platforms that you can trace, because cash, that stuff ain't working no more. You got to have invoices and platforms on how you book people and how people book you and request your services. A bank account, but a lot of people don't have bank account. I know that's y'all forte, but a lot of people, especially if it's their first year, business bank accounts, let's say, especially if it's their first, couple years in business, they haven't sought a professional advice or anything like that. They're just out here winging it. I know how to do hair. I'm gonna, get me a logo, put on a flyer. I'm doing hair. And, we taking money on Cash App, on Zelle, on Apple Pay, got a jar set up on the table, whatever. We collecting money in all these different places, and we're not really keeping track of what we're making. We know we're making good, and so we think but when you really sit down and start to tally up the expenses and everything, then you will have a better understanding of what you really are making. So record keeping is definitely primary for small business owners.
Go ahead.
And it was nice.
It was nice. I'm gonna be very nice.
Yeah, you're gonna be nice, because this your forte right here.
It's always.
I know it. Go ahead.
It got to make sense. Point blank. Period. It got to make sense. I love what you said. Now, what I do is recognize time, and I'm not gonna make no excuses for nobody. We got all these different platforms now. TikTok and all this stuff, the Instagram, you can go, people scroll on, they get all this great business information, all this great stuff. Great stuff. Listen, if you got a business, if you have a business, it's not hard. Whether you got a piece of paper, whether you got an Excel sheet, QuickBooks, FreshBooks, and it's simple. Like, you can literally get a sheet of paper, and you can put a line down the middle, and you can put income right here, and then you can put expenses over here, and you can make that tally over there. Now, I may not like it, and the IRS may not like it, but you know what? They'll accept that.
Yeah.
They will accept that. They will, as long as it's documented and you can prove it. And it got to make sense. Cool bean, you doing hair, this your first year doing hair. Great. You cannot tell me you made $20,000 doing hair and you spent out $100,000. It don't make sense. Where'd you get the other $80,000 from? Because that's what they're looking at. So if I'm stating nowhere on my tax return, I got a car, where I get mileage from? How I'm getting there? My feet, I don't think, nope, your feet got a speedometer? I don't think so. It has to make sense. And that's all that they ask. Yes, you're going to get audited more. Schedule C's and whatnot get audited more. But you want me to tell you what? I like getting audited. Let me tell you why, because there ain't nothing but somebody making sure you're doing the right thing. And if you're doing the right thing, cool bean. I done had an audit before. They stayed there for 2 hours. We ate lunch for 1 hour and 45 minutes. They got done with the files in about 20 minutes because everything was in order. Keep everything in order. And if you don't know, come talk to somebody. Come sit down with someone and, hey, I'm starting my business. I don't got a lot of money, but I want to pay for a consultation and make sure I'm in the right position. I'm saving what I need to save, where I need to be putting everything, what I need to do, because it's an excuse. That's an excuse. Oh, I'm making money. I didn't have time to. That's an excuse. You had time to go to the bank and get the money. You had time to go to Juicy Crab. You had time to go to Florida. You had time to go do the thing that you posting on Facebook. Post you going to the bank. Post you sitting down with somebody learning, getting their education. Because it's time for all that. Make it make sense.
Make it make sense.
So I'll to the point of the question, as it relates to saving on taxes. Record keeping is a good way to save on taxes. And the reason for that is when you fail to keep records, you are likely missing deductions that could actually reduce your tax liability. So failing to do that actually hurts you more than you think. Another way that you can minimize your tax liability is don't wait until tax time to come and talk to a tax professional. That's where tax planning comes in, because you can actually manipulate your tax position to whatever you want it to be if you're tax planning. So we will know during the year, you know, you got a kid, you got a business, you don't have a retirement fund set up, you don't have insurance. We can put things into place. Okay, hey, look, you need to go set up a solo K, or you need to go set up a self IRA, or hey, you need to go ahead and be an S corp, put yourself on payroll, pay out, you know, health insurance. Those are legitimate deductions that you could be running, that you could be getting to actually reduce your tax liability. Another thing too is one of the biggest expenses that I see a lot of business owners miss out on is depreciation. You got a computer that you doing business with. That computer costs, I know it costs, you got a MacBook, that's like $1,500 right there. You can actually write that off. Now, what that means is depreciation, assets lose value over time.
Every day.
Every day. So what that means is you get to write off a value of that, whatever that asset is, whether it's a building, whether it's a car, whether it's a computer, printers, whatever. You get to write the value off of that over time. Now, there is a such thing also as a Section 179 expense. Now, Trump is going to be the president come 2025. This could possibly go away if they do not extend the Tax Cuts Jobs Act of 2017. There's a thing called bonus depreciation. So I know y'all on social media and they telling y'all to go buy a G-Wagon with the money you got. If you do that, there are certain stipulations that you have to meet. For instance, it has to be a certain amount of pounds.
6,000.
It's gotta have a certain amount of doors. Whatever you're getting, you could actually write off 100% of that in the year that you purchased it. So if you bought the G-Wagon in 2024 and you go and do your taxes in 2025, not only can you get depreciation, you can get the bonus depreciation. Okay, so that is a viable tax write-off as well that can reduce your tax liability. But the thing about reducing your tax liability and depreciation is if you're already at a loss, you're already at zero. Adding stuff on top of it is not going to get you anywhere because you're already at zero. So that's why it's important to talk to us during the year instead of waiting until tax time, and also waiting until too close to the deadline. We are super busy during tax season. That is probably one of the most stressful times for our businesses. You do not want to come into a tax office within 2 weeks of the deadline, unorganized and frantic, and expecting us to get your tax return done, one, by the deadline, and two, with the due diligence that is necessary to make sure that we've done everything we can do to make sure that your tax liability is as low as it can legally be. So don't wait until the last minute. Get organized. Track everything. Yes, have a business bank account. But the thing about the bank account is this. The bank account does not tell you how much money you made. It just tells you what came in and what went out. It's not categorizing anything. It's not telling you if your business had a loss. It's not telling you if your business had a profit, which is why you need an accounting software, which is why you need an accountant. So you can look at a profit and loss statement to see, okay, what did you bring in? What categories of expenses did you have? And what your bottom line is. You got to get organized.
You know what? They probably thinking, everybody out here at TV land, I always wanted to say that. They out here thinking, I can't afford that. I can't afford no tax plan. Or they thinking about, my business is small. I shouldn't be thinking about that. That's the wrong answer. This is for everybody. Everybody should be tax planning. Like, for example, when we tell you, if somebody tells you you're sitting talking with your tax person and they say, hey, you need to go change your withholding. That's tax planning. Nah, it's basic, but that's tax planning.
Right.
And like she said, keep everything. It's so many things that people miss out on.
Right.
People miss out on depreciation. I don't even understand how they still missing out on the home office deduction.
Home office,
They still
yep.
missing that. Like, for example, right? A lot of people don't understand this. Like, I don't care if you're a Schedule C, S Corp, C Corp, whatever. Every business owner should have an accountable plan, right? And what this accountable plan does is say, for example, this camera that I'm looking at. Let's say I went and bought this with my personal money. But on my accountable plan, I have down to this camera, I use 65% in my business. Now what that means, when it comes time for write-offs, I can now write that off. So it's so many things that business owners miss out on, A, because they're waiting to the last minute, B, because, and I get it, that fear mindset that you can't afford the services of someone like us. And I get it. I felt that way, been that way. But if you're really trying to be that, if that's your goal, if your goal is, I'm pretty sure everybody that owns a business, is to make money, invest in yourself. Now, most of y'all don't want to do it. I'm great. That's what we're here for. Let somebody else do it. But somebody needs to be doing it.
Right.
Because I can tell you this. If you come at the last minute, like Jasmine say, that only means that the invoice get higher. Because now we got to do bookkeeping.
Rush fee.
So we got annual rush fee. So take the time throughout the year. As soon as you get your taxes done, it should be tax planning. So within that next week, it should be another conversation. This is what we did this year. What can we do to make it better? They put plans in action, milestones and things that be set in place. And so that next year, wow. So let's just say even if I got a refund this year, it's probably a way that you can get an extra $100, extra $200. Or if I did owe, how can I get that reduced where I owe less? That's what you should be doing, people.
Y'all recovered so well on that one. Give me 5. Give me 5. Okay. All right. So, just like our other shows, shoot, we need a longer time.
Right.
But definitely, I want them to tell y'all where they can find them and their services. Again, tell them what services y'all actually offer and where y'all located at.
So I am the founder and managing principal of Southern Heritage Financial Group, located right here in Atlanta, Georgia. You can find us on Facebook, Instagram, and Twitter at SHFG Global. If you want me specifically, you can follow me on all platforms, Your Family CPA. If you're looking for a free consultation for 15 minutes only, www.shfgglobal.com/services.
Torbert Financial Services, Torbert Financial Services on all social media platforms and LinkedIn as well. We're here located once again in Phoenix City, Alabama, at another location in Columbus, Georgia, and we also have a satellite location down in Auburn, Alabama. We're here to service all of your tax needs and your accounting needs. They go together, right? Especially if you're a business owner. We're looking forward. We also have a free consultation, 15 minutes, because your time is valuable. Our time is valuable. Can't wait to hear from you.
Again, my name is Ashley Russell, A&R Consulting. I offer tax preparation, notary, some bookkeeping, but I think I'm about to outsource my personal bookkeeping to one of these two here. But anything that you need tax related, if we don't know, we're connected to somebody that does know, but most likely we know. We specialize in serving you guys locally in Covington, my favorite big city of Covington, but we do service many other states. I can't say all 50 because tax professionals know that certain states have regulations. Mm-hmm. Okay, so we do service most other states. But we can be found year-round, social media. My personal page is Ashley Weaver Russell. My business page is A&R Consulting of Georgia. Instagram, A&R Consulting of GA. Website, ANRconsultingofga.com. You can book a 15-minute consultation. There are links there for you to start your tax return. If you have any tax questions, if you think I didn't work enough, anything like that, please call me. We have saved taxpayers a lot of grief and able to put some money in their pockets because they thought they couldn't file. So we do what's in your best interest and what's legal and moral. So if you need anything tax related, please contact us, Ashley Weaver Russell, A&R Consulting of Georgia.
And I'll add too, I forgot to say what I offer, but yes, tax return preparation, planning, resolution, bookkeeping, payroll. If you want to start a business formation, I do estate planning. If you're trying to get ready for a loved one's transition, we do that as well. We also do personal financial coaching. So whether you're an individual or a business, we also have attestation services for my business owners that need audits, compilations, reviews. We do all of that. So if you need a one-stop shop, I'm your girl.
We do all of that as well. and we do bars, bar mitzvahs, birthday parties, weddings, wherever you at, we'll be there.
Yes.
Go feed him because he said he hadn't ate, and I think he done went.
Listen,
You do for real?
Yeah, I have saved somebody money at a wedding. We do this for real. Because
It must have been the groom.
no, actually, it was the bride. But you know, but the problem of it, life happens. You know what I'm saying?
Life happens. Life
And the
happens.
thing about it is, we say cut.
Okay, so
Oh, I'm sorry.
Gwen's so silly.
Very silly.
hey, so they was awesome. Baby, some of this shit go viral, baby. Let me tell y'all about us. So we probably didn't tell y'all on this one. We do taxes too. So y'all know us Gwen's Business Corner with Deonta B, but we also run Expert Tax Service. We offer tax preparation service and a whole lot of other services as well. Just pick and choose anybody, but make sure you choose somebody
Right.
that got some
That's counsel.
tax sense and know the tax law and make sure that they can save you money. You can follow our tax company on Expert Tax Service on all social media outlets. We're spelled with the X instead of E. Also, you can visit us because it is tax time at www.experttaxservices with the S on the end.com. We service people nationwide as well, but outside of taxes, baby, follow us at Gwen Business Corner
Yes.
on YouTube and all social media outlets. And also, make sure you check this show out on Expert Tax Service page and also on our YouTube channel. You can follow me, Gwinnetta Wright, on all social media outlets. We appreciate y'all and
We
y'all
do.
knowledge and y'all
Thank you.
humor.
Yes.
Yes, we love the humor.
I was the serious one.
Okay.
I was the serious
And
one.
love
Man.
the humor.
Well, you can follow me at all social media outlets at The Real Deonta B. And we want you to get your tax planning together. Get ready for tax season. Ask questions. That's really what it all boils down to. And when you're choosing a tax professional, make sure you're choosing one that's going to have your best interest and treat your refund like it's theirs. And that's what we all do.
Absolutely.
All right. So we out.
Well, we out.
We out.
Yes,
Check.
and we want you to keep watching Gwen's Business Corner. We're going to keep giving you all the tea, the business tea, that is. And so we want you to stay tuned and keep it locked and keep following us. And we'll see you next time. Peace.